All right, welcome back to 0.5%. This is episode 12, part 4. We have left off on FinViz, going through different map filters they have. We looked at the S&P 500, how it was pretty decimated on Friday. Took a look at the world, and then we took a look at exchange traded funds. It is the next day, and there's already a few things bouncing back. You see telecom serve is up, healthcare is up, insurance is up, a bit into utilities, beverages, beverages and non-alcoholic beverages, consumer defense, tobacco is up. Let me see who's going well in the world right now. Belgium, France, Germany, United Kingdom. Whoa, Baba is up crazy. Wow. That's insane. Baba could have a crazy run. Well, maybe that would make sense, because if all the tariffs between the US and China, more people are going to be using China's stuff, and Baba's the biggest out there. Wow. All right. Anyways, back into exchange traded funds. These have also changed a little bit. So when we looked at this yesterday, the only things that were up were inverses, volatility, and crypto. Crypto is back down. Fixed income is up a little bit. International is up a little bit. And commodity. The gold is up. I'm going to be trading gold again this week, so that's great. All right. So where I wanted to go from here. And there's some quick searches too. Look at that. So I think I just saw... No, I thought I saw ARK over here, and I like the ARK ETFs. But anyways, the next step on the ETFs is going to be etfdb.com. That's ETF database. And we've been here before. I don't think we went over this tab here, though. If we go at the top to ETF database, brings us to a directory. I want to look at ETFs by sector, so I'll click that one. And when it brings up the sector rankings, the first one is assets under management. So right now the technology sector has the most assets under management according to this database, and it's 165 ETFs in the database. But what's interesting to me is if we click over here on the return leaderboard, we'll see this: materials, energy, consumer staples, and financials are all up in the last 3-month return, which is when Trump came in, when the tariffs started going in. And if I go back to our ChatGPT conversation, it says that here: when considering historical trends during periods of increased tariffs, such as during President Trump's term, 2 sectors often stood out: materials, industrials, and defensive sectors like utilities. These were captured in the ETFs, the materials Spider XLB and the industrial Spider XLI. Let's see, I think there was one more note on this. Something in the chart, I believe. So yeah, in the chart, utilities went up, industrials went down. I'm not sure, but right now it's predicting, or if I remember the conversation or the research right, industrials and consumer staples, I think we're supposed to be up. So I am curious. The materials is up 13.92%. That's way outdoing every other sector in the last 3 months, followed by energy that's at 8.19%. So I'm going to go into the materials sector, and what I'm kind of working my way towards right now is, I said in the last part of this episode that I recently pulled all my ETFs for the first time since I started investing. I was looking at them on the 1-day candlesticks over the last 4 years. and the moving averages have crossed below. That to me is indicating it's going to keep going down. We discussed in the previous part that I think I was saying the QQQ to return to its 200, but I meant 50 moving average. And I'm probably going to go back into that some, but if it takes a while for that moving average to cross back over, I'm kind of interested in these XLB, XLI portfolios that I can move into temporarily. So XLB, that was one of them, right? Let me scroll back down. XLB and XLI, if we go to that materials list, XLB is the second ETF listed. And that is because this table is ordered by total assets. Total assets. So it's number 2, just second to Van Eck Gold Miners ETF, which is very similar to the one that I'm trading, I believe, except for mine is Nugget, and it's a leveraged one. So let's take a look at XLB on here. Or actually, let me see what else the table was saying about it. So XLB, the materials select sector spider fund. Its industry is broad materials. Year to date, it's down 0.79%, which is actually out of the top 1, 2, 3, 4, 5, the only one that's down. The Van Eck Juniors is number 3. So gold is the only thing that's way up right now. In the 3rd and 4th spot is Flex Shares Morningstar Upstream Natural Resources Index Fund, and then below that is the Spider S&P Global Natural Resources ETF. So average volume is not really ideal for those bottom two. It's over 1 million for the gold ETFs and the Spider, which is the ones I usually like to be in. And it did take a plunge on Friday. It was down 4.52%. So let's take a closer look at it. What are its top holdings? See if we recognize any of these companies. Its number 1 holding is Linde PLC with 18.55%. That's a huge chunk of the portfolio. The next company is only 6.8, but it is one I've heard of. It's Sherwin-Williams Company. And then there's Air Products and Chemicals in number 3, Ecolab, Newmont Corporation. I'm just going to read down to see if I recognize any of these. Nucor, I am familiar with them. Dow, PPG. Let me see what Linde PLC is. Why is that such a huge... So ETFs with Linde PLC exposure. So I think this is another... Oh no, these are ETFs that also have Linde. What is Linde though? Let me pull up a Yahoo if I can. New tab. What was the ticker? LIN. So Linde, how are they doing? They have a PE ratio of 32, so this is an extremely profitable company, probably has been for a long time, if I understand that right. Again, I don't know nothing. I think I'm just making stuff up half the time. But I like to see a positive PE ratio. That's nice. Its 1-year target is $496, and right now it's sitting at $435. So there's a lot of potential there. Forward dividend and yield 6% or 6 points, 1.37%. So there's also dividends in these ETFs, which is another great thing. I was getting dividends in QQQ and I was getting dividends in SOX, and then just having it reinvested, and it it was compounding over the last, I don't know how many years, but definitely contributed a lot to my total balance. All right, so I want to go to the advanced chart at Lin and just take a look at how it's been doing. Let's go. Well, this is the 1-day candlesticks. Let's zoom out as hard as I can, or as far as I can. So yeah, back to COVID. It looks very similar to, I think yesterday we looked at XLB or XLI, and we went back to 2020. And now it makes sense that ETF looks very similar to how this company is performing, because it's the majority of the holding in the ETF. Let's see if I can get any different picture. If we go back to like 1 month candlesticks, it has skyrocketed. Let's zoom out though a little bit. This is better. All right, so now at the years, actually, it did like the whole market, and starting in 2018 started having more massive changes, but it's staying between its 10 period moving average and its 20. It's hitting its 20 right now. Actually, it's gone slightly under, but it's still in an uptrend on the chart. As far as months go, the deviation moving average has gone under, but it's still positive. So what does that mean? It means it could just go sideways unless it starts dipping hard. But as long as it's positive, it could just go sideways as the moving average deviations are coming back to zero. So that's kind of nice. Its last big candlestick. I mean, this to me looks like it should be going down. This will mean it holds it, if I understand these right, but the smaller volume candlestick, red candlestick after the green, means the price should drop a little bit. And it looks like it is already under the middle band of the Bollinger Band. So let's come back out to the weekly sticks now. Oh, we've had 2 fat ones. Yeah, it's probably, well, it's at the same height. You can see all the support and resistance back in April at this price. So on the week, it is almost going negative and has crossed under. I wouldn't be surprised if it keeps dipping yet. Or it keeps dipping for the week. Let's check out the day again. And but the day is way down. Damn. And it's outside. No, I have a feeling things are going to get slammed again tomorrow. We'll see. Maybe recover a little bit, but something like this probably is going to happen. In my opinion, like same thing that happened back in May. Only difference is the MACD deviation is positive right now. So, yeah, it might. I think it's going to do the same thing, actually. Like, you look at the volume under this massive one, though. Yeah, we'll see. I don't think it's going to... Monday, I don't think it's going to be the time for me to get back into the ETFs, but pretty soon. Well, definitely not Monday, actually. With all the news that happened Friday, Monday is going to be crazy. I'm definitely going to take another look at the ETFs before going to bed, and then get up early to see how much has changed in the world, how much has changed in the sectors for the U.S., and play accordingly. But I think I'm still going to just trade nugget and dust. It's the charts that I'm starting to get the most familiar with, how they're trading. And when I go over more of the, episode 11, I have one more part I want to finish, reviewing the losses. I've started to notice that I think I'm picking more winning trades than losing, but my biggest issue is setting the stop losses for my losers. So I want to make sure that is accurate assessment about how I've been trading, and if it is, then I'll do a video on it. I'm going to probably watch a bunch of videos on stop losses and just use the charts too. Like, the trades that needed a stop loss, why did they even need one? Was it a bad time to get in, or did it do something different? And if it did something different, then yeah, I need to know how to put the stop loss. But if it was just not the right time to buy in and I messed up, then yeah, that's on me. Either way, it's on me. But I think that's good for the ETFs. Some pretty interesting stuff. I'd like to dive some more into the FinViz parts of ETF and then an ETF database to maybe scope out some other good ones to invest in while the rest of the market's crashing. Maybe the volatility one daily, but I wouldn't want to hold that. And yeah, if anything else interesting comes up, I'll make a note on it. But my next part is going to be on crypto, so I'm going to switch over to that. Thank you for watching.